Sri Lanka, known to be the pearl of the Indian Ocean, a country which topped the list as the best travel destinations in the world with a breathtaking natural beauty and a unique coastal line, is now facing a severe economic crisis. Crisis has been extended to a situation where the public had to queue up for days and weeks to get fuel, gas, kerosene and other essentials needed to continue their daily life. There are no medicine and critical surgeries are being cancelled. Doctors say that this economic crisis will kill more citizens than the COVID-19 did. People are demanding on streets for a political reform and there are wide-scale protests being carried out daily. Years of mismanagement has caused imports to rise than exports and the government spends more than what it earns. There is also a large budget deficit and a trade deficit in the country. Many industries were affected during this economic crisis. With the ban on fertilizers, farmers started facing massive issues. Not stopping from there, the fisheries were impacted vastly by the fuel crisis. On top of all these, the government had decided to ban a large number of imports with the intention of saving foreign reserves. The crisis in Sri Lanka is more than an economic crisis. The question is, how did it happen? And we need to find answers to how are we going to overcome this. Let's find out.
I think current economic condition we have seen and we experience some of the unrest that transpired because economic situation led to social unrest and people started coming to streets. So this was started with I think towards March, April, central bank devaluing or adjusting the rupee dollar exchange rate which was around 203 became 260 originally, then it went up to 300 plus, and there was a black market created. Some days it went up to even 500. So in the grey market people started trading because there was no dollars coming into the market. So with that situation there was so much of price escalation happening, especially Sri Lanka being very much import dependent country. We saw price escalations and then which led to cost of living increases. On the other hand, being major component we are using for fuel imports. Fuel import cost also went up and it also doubled. So all in all we were having a kind of increase in cost, and with that social unrest and people started expressing their views and sometimes going up to the level of protest and to a certain extent violence. So why this happened actually, I don't think you can just look at it last 1 year or 2 years and say it's due to 2 to 3 years of impact. We have to go back and see when we started and how long this has been there. So when you look at historical information, main thing that we see is we have run twin deficit in our economy over a period of time. Twin means deficit is in two fronts. One is external side deficit, that is our balance of payment, current account having a deficit. Then internally our budget is always a deficit. Budget means your income is lower than expenditure. So this external front dealing with other countries having a deficit as well as internally running a budget deficit has created many issues. So if I take the first fiscal deficit or budget deficit, that has two components. One is primary account deficit and another one is overall deficit. Primary account deficit is your total income less expenditure without interest cost. So in other words, how much of money a country generate for them to repay their interest cost. So that's one kind of way to look at whether you can self-sustain. The other deficit, overall deficit, is after deducting total expenditure, including interest expenditure, what is your deficit? So in Sri Lanka, I think we have had only 2 to 3 years since independence having a surplus in primary account. That is, we have been able to have a surplus where part of that surplus could service interest expenditure. But in almost all the years we have had budget deficit. So when so normally you express it in terms of GDP. So our GDP as a percentage of the GDP, budget deficit in I think 2021 went up to almost 12-13 level, which was around 5 to 6% in 2012 to 19 period. It was 5 to 6%, which went up to 12 plus budget deficit level as percentage of the GDP in 2021. So we can see that there is a remarkable increase in our budget deficit over period of time. So this deficit, if I look at it in terms of accountant terminology, in a corporate world, if a company is running a deficit over and above their income, in other words, they are making losses. So you generate income, you have expenditures, and there is a loss that a business incurs. So what happens when you have a loss? Obviously you have to finance your loss. Either shareholders needs to bring in money because business needs to continue, or you have to go and borrow money to fund that loss, because we know balance sheet is equivalent to asset is equivalent to liabilities and equity. So this balance needs to be maintained. So if you have a deficit, you are reducing your equity. How do you increase it? Either you have to replace that with additional equity, or bring your creditors or your lenders increasing money. So Sri Lanka, since we couldn't increase our revenue, so option available was borrowing. So right throughout, as I mentioned earlier, we have had budget deficits, primary as well as overall. So only option to finance that was borrowing, and we have continued to borrow. So it has peaked at this particular moment. It's not just 1 year borrowing. Over last several years, we have continued to borrow, and that borrowing has been used to fund capital expenditure in the fiscal account as well as recurrent expenditure, because our income has not been sufficient to even meet our recurrent expenditure. So now it has come to, so if you apply it to a corporate entity, what happens? When you have excessive borrowings, you at some point you have to repay. For you to repay, you need to generate profit. But if you don't have profits, you get into a trap. Then it becomes that you have to borrow again to repay borrowing. So that is the situation where we are currently. So without borrowing, we can now repay previous borrowing. So you are in a debt trap. So that's that. If corporate is in a debt trap, similarly, now we have also gone into that debt trap. The issue currently, in addition to normal borrowing, the borrowing also has two components. One is local borrowing, that is in rupee bond market, rupee market borrowing. Other one is foreign borrowing, dollar borrowing. So we have increased our dollar borrowing as well. So now the current situation is such that we don't have dollars to repay those dollar borrowings, and we had to go back and tell our creditors. You have noticed central bank announcements in April that we are not in a position, so country became a default country because we couldn't repay our foreign creditors. So I think at the moment composition is almost 70-30 or 60-40. That is, local borrowing is 60, foreign borrowing is around 40%. So this is one side. So much of borrowings, and now we can't repay, especially external borrowings. And for you to repay, even you don't have internally generated funds. So that's why we have to go back and tell some of our external creditors that we are going to have a default, and now we have started negotiations for restructuring and debt repayment plans. Then coming back to other deficit, external account. Our export roughly, if you look at 2021 data, as I remember, it was around 12 billion US dollars. In terms of US dollars, it was 12 billion US dollars. Our imports, roughly its export income is 50% of import expenditure. In other words, import is almost double. So to be precise, I think it was around 20 billion US dollars. So you have export of 12 billion, I'm talking about goods and goods account, trade balance, export of 12 billion and import of 20 billion. So export majority comes from garment exports. Garment sector account for around 5-6 billion exports. Then rubber and related products around 1 billion, tea 1 billion plus. So that's how this 10 billion export, 12 billion export composition comes. 20 billion import composition is mainly again 3 to 4 billion is on fuel, then machinery and other intermediary equipments, and raw material required for some of these export related, let's say garment industry, they need to bring some of these raw materials for export purposes. So all that lead to this 20 billion. So when you have imports higher than exports, again we know what happens. There is a foreign currency deficit at trade account level. You always demand more dollars because your dollar revenue is lower than dollar expenditure that you run as a country. So that deficit is then to a certain extent funded through service, and those are mainly coming from one aspect is tourism. So tourism, we know what happened after 2019. I think 2000 last year that we had the best year, I think our history was 2018. 2018 we had 2.2 million tourists coming to Sri Lanka. That was the highest ever number. You can just check these numbers. As I remember, it was 2.2 million. And we generated around 4.5 billion US dollars as tourism income. If you look at average tourist per tourist per annum income comes to around $1,900. When you divide 4.5 billion by 2.2 billion, 2.2 million, 2.3 million tourists arrive. So that's a significant number. 4.5 billion tourism income. Now, from 2019 April, you know what happened in 2019 April? There was this Friday attack, and several people died, and after that there was a drastic drop in tourist arrival. So when we started picking up towards latter part of 2019, after this situation settled down, and early 2020, we know again what happened in 2020 March. So we started recording first few COVID cases. So, and worldwide also tourism got really impacted. So 2019 we had a very low number. I think 2019 number was 2018 it was around 2.2 million tourist arrival. 2019 it was around I think 500 to 600,000. So gradually 2020 it came down. 2021 also the same situation, COVID was there. So that 4 billion plus tourism income which we got in 2018 was not there in 2019 to a certain level, around 600 million, and in 2022, even as of now, still we have, you know what happened in April 2019. So the attack that we experienced, Easter Sunday attack in April 2019, so that created negative impact, and so this 4.5 billion revenue, as I remember, came down to around 3 billion. Still, with that attack also, we had a successful 1 quarter, and we lost almost 2 quarters of that year. April to September. But again, latter part of 2019, there was tourism picking up. So even with that attack, I think we managed to record around, as I remember, 3 billion US dollar, 3 billion revenue. But after 2019, while we were picking up, you know what happened again in 2020, March, April. We recorded first few COVID cases, and worldwide also it became a pandemic, and tourism got really affected. The first industry to got affected was tourism. So I think 2020 tourism income was as low as around 600 million. So 2021 again the COVID impact continued. Then and there country was locked down. So it was hardly any revenue in 2021. And 2022 was also similar year. We just started picking up tourism. Again, we know what happened with this unrest. So if you look at 2019, after 2019, 2 years, 21 and 22, and part of 2022, so 2.5 year period, we would have lost almost around easily 10 billion US dollars revenue that we would have earned had the country been in a normal condition or situation. So this has created a really big impact on our economy. So we are being really a small economy. As I mentioned, our trade account in the external account having a deficit. That deficit is financed through some of this service income like tourism. So 2 to 3 years having this kind of a deficit, creating a big impact on our debt repayment, and then our foreign reserves, all that could really hamper. In addition to that, the next source that we have, the biggest revenue that we have to curtail or reduce the impact coming from trade account is foreign remittances. I think 2021 our foreign remittances was around 7 billion. So with these remittances and tourism, you to a certain extent nullify that deficit in the trade account, but it is not that great, and you add to your foreign reserves only a minimal amounts. So for you to have a significant increase in foreign reserves, country needs foreign direct investments, and we know that over last 2 to 3 years we haven't had major foreign direct investment. So as I mentioned earlier, these two deficits, internal deficit coming from budget deficit creating debt trap, as well as not having adequate foreign revenue generated through external transactions over several last few years, not last few actually, over last decades, has created current situation, and we are going through the bad patch of and peak situation that we have seen since independence. So that's what I could say current situation and what has happened, really happened. Appreciate efforts put by our authorities, include especially central bank, some of the actions taken immediately. I think they looked at, because we were having a kind of low interest regime, where the idea of government at that time and central bank would have been to increase money circulation and creating consumption, and through that to have better growth in the economy. But some of the impacts, as I mentioned earlier, didn't work as they expected. Since interest rate was low, still private sector credit was growing, and it created demand in the market. And so when you know what happens when money supply is high and demand is high, it leads to inflation. So central bank then started increasing interest rates. I think again towards March or April, 700 basis points increase was there. The policy rate increased by 7%. Our interest rate, especially when you look at 1 year treasury bill rate, which was around 8.5 to 9% a year ago, towards March, April 2021, went up to almost 25-27 levels in May, June. So that's the current situation. So with the policy rate increase, now interest rate has gone up, and we see there is credit growth also coming down, and so obviously demand also will come down. So government has taken that step. In addition, I think since we are now moving towards IMF discussions, whether you have IMF or not, I think we'll have to look at restructuring of our economy in relation to income expenditure ratio. Any business, if you don't have enough income, either you have to increase your income or reduce your expenditure, or you do both. So country also, whether we like it or not, we'll have to go through that process. And we have seen indications of income increases, and there will be interim budget towards August, September. With that interim budget, government is going to increase the income of the government. In other words, more taxes will come. So government has revenue source, main revenue source is taxes. So we have to expect direct taxes as well as indirect taxes to go up. I think already there are indications that income tax corporates as well as income tax of individuals going up to around 30% plus levels, and indirect taxes like VAT going up. So some of those already have been implemented. So with that, I think government will try to increase the revenue side. Similarly, as I mentioned, now there's a challenge of one deficit to be reduced, that is budget deficit. You have to then look at how do we reduce our expenditure. So expenditure also, you have recurrent and capital. I think government has already given instructions to their ministry secretaries and other regulators to cut down on capital expenditure, and all the other unrelated non-essential expenditures to be reduced. I think Secretary to President as well as Secretary to the Treasury issued circulars to that effect. So they are trying to look at reducing expenditure as well, both capital and recurrent expenditure. In addition, we all hear, and some of us know as well, state-owned enterprises. When you use the word enterprise, enterprise means something that you do as an entrepreneur. So this is a state becoming an entrepreneur. So entrepreneur's primary objective is making profits. But we know there are several state-owned enterprises that are running at loss, various reasons. Inefficiencies, cost not being adjusted to the market rate, and subsidy schemes being converted through these entities as political agendas. So due to various reasons, entities like Cipetco, entities like CEB, and Sri Lanka Airlines, so many of those entities are making huge losses. So finally that also adds up to our budget deficit. So for us to have a reduction in this budget deficit at the immediate near future, we'll have to look at reforms relating to some of these entities as well. So as I mentioned, definitely short term, government will increase the income taxes and indirect taxes, tax side. Then we have seen cost reductions and clear instructions to reduce cost. In addition, I think as I mentioned, there needs to be a reduction in budget deficit. For them to do that, other areas needs to be addressed, including restructuring of government-owned entrepreneurships, state-owned enterprises. Then as I mentioned earlier, external account having foreign revenues, I think immediate action needs to be taken to bring back that tourism income as soon as possible to come back to our 4.5 billion or 5 billion level revenue. So otherwise, we know what has happened. Unfortunately, due to some of these unsettlements, unrest in the country, again that got affected towards second quarter. So we are hopeful that it will pick up, and latest information available also government is and relevant authorities are pushing hard, including industry stakeholders. They have worked together to bring back that tourism income. So I think this year I don't think we can reach 2 billion, but at least 1.5 billion revenue would be a big relief considering the current situation we are in. So that's another matter. I think short term we need to get back that same 4.5 billion or 2 million tourist arrival. So in 2023 definitely we should go for that, and it has to be even higher number. Then third step would be to see foreign remittances. Again, towards last few months, I think April, May, even June, what we hear from central bank is that our foreign remittances have come down to around 250 million to 300 million a month, which was around 500 to 600 million a month in 2021. So it has come down to 50% of foreign remittances that we used to have the previous year. So it could be due to job losses and some of the issues our employees encountered during COVID and some of the economic impact other countries had. But there is some political as well as trust issues, I believe. Our Sri Lankans who are working abroad not sending their money, or could be due to speculation that they can convert even at a higher rate. So all these have led to a reduction in foreign remittances. So we need to get back, somehow build that trust and get our foreign employees to channel their foreign earnings through banking system rather than going through grey market. So that's another, I think, short-term win we'll have to get for us to stabilize and have local economy at least continue. So those are the short-term things I believe government is also already working, and I also feel that has to be a kind of priority. Yeah, so I think as I mentioned, external deficit is the difficult one to crack because internal one is within our control. External one is more to do with your trading, your transactions with external parties and winning other part of the world. So a lot of us we here talking about increasing export revenue, merchandise or trade account related revenue. If it is not easy. If you look at companies like Brandix or MAS, they have come to 1 billion level revenue. Those entities make 2 billion. I think now some of those entities make around 2 billion revenue per annum in terms of dollars. It took 25-30 years for them to reach it. So manufacturing and coming with that scale is not 1 year, 2 year process. So it takes time. But wherever feasible, so garment industry is a success story. Similar to that, we'll have to see how we get some of the manufacturing based also established here. So we'll have to look at feasible manufacturing options. It could be rubber related, it could be tea related, value added. So that needs to be anyway established. But it takes time. So we need, though it's long term, at least we need results coming through within next 3 to 5 year time. I don't think we have time to wait for 20 years to bring us result. So in that sense, I feel more easier one to get quick results within 3 to 5 years would be service sector. So as I mentioned earlier, tourism, we first need to get our base. 4.5 billion or 2 million tourist arrival. And then we need to look at how do we have differentiations and per person income increase. So if we are having currently 6 to 8 days stay averagely, how do we increase it to 14 days? If we are getting low spending tourism and tourists coming, how do we get more Europe or USA per person expenditure is high. So those are, I think, strategies that we'll have to look at. What's that niche? How do we go from 4.5 to 10 billion within next I'm sure those are doable. Countries like Maldives is doing it. Despite COVID, they have recorded higher growth. Countries like Thailand is doing it. So with all our resources, our brains, I'm sure we can reach and double this. So that's a win, I think, more than manufacturing and production base. These are service sector, and we already have. We have rooms, we have facility, we have homestay available, we have more than anything else friendly people. And then it's worldwide, everyone knows it. So I think it's a doable thing. So we should work towards it, increasing that to almost doubling. Second one is, as I coming back to again remittances, I think we have around 2 million people working abroad. So those 2 million, if you look at 2021 data, so when you divide 7 billion revenue by 2 million per month, it's around $300 to $400 per person. How do we increase this $300 to $400 per person to $600 to $700? For us to do that, I think we need to go higher on the capacity and skill levels of people whom we send. Rather than sending raw hands, we need to train people and send. Rather than sending domestic workers, we need to look at skill level people sending. So their salary is going to be pitched at a higher level. So obviously when you have higher salary, your portion that is coming to Sri Lanka is also going to be higher. So that's another target I believe we should work, and through vocational training centers, through IT related services and education, through hotel and other skill developments, we should target even financial service and accountancy professions. We need to target elevating that per person revenue from 300 to 400, going up to 600, 700 level. Easily, I'm sure we can do it. That's another way to double remittances coming to the country. So with these two initiatives, if we target and do, I'm sure within next 3 to 5 years, we can have a better balance sheet for the country, and we can have a better balance of payment with regard to our external. Third one is IT and related services. As I remember, I think Sri Lanka Association of Software /Com put a strategic paper, and as a body they want to reach 5 billion revenue by 2025. I think currently they are achieving around 2 billion. I'm sure they can go. I'm not sure whether they can go up to 5 billion by 2025, but it's a doable target. And there are so many competent IT technology related companies and world class entities that Sri Lanka has produced. In addition, I think we need to look at foreign direct investments and foreign portfolio investment side. So for us to have export-oriented economy growing more than service-related, production-related, I think we need to get more foreign direct investments coming. If you look at some of the success stories of manufacturing industry, why they have been successful, because they have started those entities have joint ventures with foreign partners. So they have brought capital as well as technology to the country, and Sri Lankan partners have benefited from that. So I think that's the same thing we'll have to work towards if you have to get next phase of manufacturing cycle and growth. So for that to happen, obviously we need stability. We need clear direction with regard to our country's policies. So those things needs to put in place by the new government, and President was undertaken that task. Some of these discussions happening with IMF, I'm sure will have a positive impact in that regard, because when a country go through IMF path, it gives an indication to the external lenders as well as external investors that there is a particular framework and a policy that a country has agreed, and country will build a bit of credibility among the international community and investors. So rather than looking at IMF as a negativity, I don't think there is any other solution available at this particular moment, because we have not seen it coming through. This opportunity and working with IMF will have to look at seriously, and government is considering it. So when those plans put in place, there will be investors considering Sri Lanka again, and so local businesses will have opportunity to work with some of those entities. So foreign direct investments will happen, and similarly that will bring back confidence in our stock market, because we saw a lot of foreign funds moving out. So those funds will also start coming in, so portfolio investments also will continue to increase. So I think within next 3 years, we should 2 to 3 years time period, we should see a different Sri Lanka, and then these are not difficult things. If policy framework is put in place and corporates working towards it, I'm sure we can come out, because this crisis has opened many eyes, and some of the things that we rejected earlier, a lot of people have realized we have to accept it and move ahead. So I am sure that has created some opportunities.
Let's convert this crisis as an eye-opener for unleashed opportunities and make this country a better place for living and take her to the top. Let's rise through ashes.